Hello, 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 audience. Hello, audience. Hello, everyone. Is my voice audible? Hello, everyone. Is my voice audible? Hello, everyone. Is my voice audible? Is my voice audible? Hello, everyone. Is my voice audible? Very good evening, guys. In today's session, I am going to explain you various MCQs relating to the basics of accountancy. As a part of discussion, the first question is, which accounting concept satisfies the valuation criteria? So in accountancy, generally the transactions are generated or the transactions are carried with some kind of valuation. That valuation criteria will be taken into the consideration with the help of some concepts, accounting concepts. So as you all people know, various different types of accounting concepts like going concern concept, business entity concept, right, cost concept, accrual concept, dual aspect concept, right. I hope it is very clear. So generally the valuation criteria will be taken into the consideration. Valuation criteria will be taken into the consideration with the using of few concepts. Those concepts are those concepts which really shows impact in the financial statements and to ascertain the financial position of any kind of organization. So let us take now concepts. Those concepts are those concepts which really shows impact in the financial statements and to ascertain the financial position of any kind of organization. So let us take now so these accounting concepts which really values going concern concept. Going concern states that there is no these accounting concepts certain going concern concept. Going concern these accounting concepts states that there is no right. So there is no certainty. So there is no certainty in business period. So for that purpose, the valuation really matters. So valuation will be taken into the consideration with the help of going concern. Yes, realization is really important. So there is no kind of value without realization. Realization is the consideration for the valuation. In the realization concept, the transactions are recorded whenever the realization happens. Whenever cash received or paid. So cash received or paid. So whenever this realization account realization criteria is concerned, or whenever the realization concept has taken into the consideration, whenever we assume that cash received or cash paid, generally the valuation criteria. And cost concept, yes. So for the transactions, generally the cost will be considered in order to know what is the position in any kind of organization. So option A is the right answer. And cost concept, yes. So for the transactions, generally the cost will be considered in order to know what is the position in any kind of organization. So option A is the generally the cost will be considered in order to know what is the position in any kind of organization. So option A is the right answer. A trader has made a sale of rupees 75,500, out of which cash sales amounted rupees 25,500. He showed a trade receivables on 31st March 2014 at 25,500. Which concept is followed by him? So try to understand. Cash sales amounted rupees 25,500. He showed a trade receivables on 31st March 2014 at 25,500. Which concept is followed by him? So try to understand. Guys, any guesses? Guys, any guesses? So what does it mean? He has given like a transaction of 75,500 rupees of the sale transaction has been happened, out of which the cash sales amounted rupees 25,500, and whatever the remaining 50,000 is a credit sale. He showed the trade receivables on 31st March 2014 at rupees 25,500. Which concept is followed by him? Try to understand. He showed the trade receivables on 31st March 2014 at rupees 25,500. Which concept is followed by him? Try to understand. So, what does it mean? He has given like a transaction of 75,500. Nusrat Naushin, hi. Kumra Prasad, hi. Bushra Mevin, hi. Spice Store, good evening. Good evening, Mark. Kushala Pasikanti, hello, hi. How are you guys? So try to solve the question over here. Nusrat Naushin, hi. Kumra Prasad, hi. Bushra Mevin, hi. Spice Store, good evening. Good evening, Mark. Kushala Pasikanti, hello, hi. How are you guys? So try to solve the question over here. Kushala Pashikanti, very good answer, ma. It is an accrual concept. See, accrual concept speaks only about the relating to the period, irrespective of received or paid. So it will not be considered other cash received or paid. It will be considered only relating to that period, whatever the amount being generated, whether it might be the expense or it might be the income. Whatever the income being generated or expenses being incurred relating to the particular period. So you can see here accounts receivable he has been shown irrespective of the receipts of payments, whatever it might be. So on the accrual basis he has been shown. Very good, Kushala Pasikanti. Next, in which of the following cases accounting estimates are needed? See, whenever accounting estimates, you might have studied in the BCom. So insurance claims, right? Insurance claims. So generally insurance claims will be taken part in the case where records are lost records. So data appropriated or data absconded or data lost. So in that situations. So yes, accounting estimates are really required whenever employee benefit schemes. Yes, inflation, employee benefit schemes will be taken care like in the case of inflation. Time value of money, right? In that cases, impairment of losses. Yes, generally during the impairment of losses also the accounting estimates are needed. So next, inventory obsolescence. Absolutely. So whenever the inventory obsolescence information is missing, information is missing related to inventory. So in that cases, accounting estimates are needed. So answer is all the above. Is the correct answer. So in that cases, accounting estimates are needed. So answer is all the above. Is the correct answer. So next question, Diwali advance given to an employment. Diwali advance given to an employment. So what kind of expense it is? Is it a revenue expenditure? It is a capital expenditure, deferred revenue expenditure, or it is not an expenditure? So try to get some points. Given to an employment. So what kind of expense it is? Is it a revenue expenditure? It is a capital expenditure, deferred revenue expenditure, or it is not an expenditure? So try to get some points. Guys, any guesses? Guys, any guesses? Diwali advance given to an employee. Diwali advance given to an employee. Diwali advance, try to understand, it is a revenue expenditure. No, revenue expenditure is recurring in nature. So capital expenditure is expenditure paid in order to increase the production capacity. So deferred revenue expenditure, again it is no. So correct answer is not an expenditure. So Diwali advance, it is not an expenditure. So deferred revenue expenditure, again it is no. So correct answer is not an expenditure. So Diwali advance, it is not an expenditure. Next. A firm has reported a profit of rupees 1,47,000 for the year ended 31st March 2014 after taking into consideration the following items. Oh, okay. What does it mean? A firm has reported a profit of rupees 1,47,000. 1,47,000. So profit is 1,47,000. With taken into the consideration. So try to understand, the cost of asset 23,000 has been taken as an expense. 23,000 has been taken as an expense. So try to understand, it is not an expense. So it is not as an expense. So what does it mean? It reduced profit. So add it to profit. So 23,000 should be added. So plus 23,000. Okay. Next. A firm anticipated profit of rupees 12,000 on the sale of old furniture. Anticipated profit, right? So anticipated profit. Okay. Next, a firm anticipated profit of rupees. We will not consider old furniture. Anticipated. Right. So anticipated profit. Anticipated transactions. Right. Consider. Right. So we will not consider anticipated, only transactions. Actual transactions are right. So considered. We will not consider anticipated. Right. Actual or considered. Now try to understand. So the firm anticipated a profit of rupees 12,000 on sale of old furniture, right? So now the furniture, anticipated profit, whatever the profit we have considered as an income, right? We have taken into the credit side, which increased the profits. Now we have to decrease. So we have to decrease, right? Okay, 12,000. Next, salary of 7,000 outstanding for the year has not been taken into the consideration, right? Try to understand. Salary of 7,000 outstanding for a year has not been taken. It has to be taken, right? So it has to be taken. So we have to consider it as an expense. Since it is an expense, 7,000, right? Next, an asset of rupees 85,000 was purchased for 75,000 and was recorded in the books at 85,000. So it doesn't shows no impact. No, it shows no impact, right? Okay. Now, what is the total value? Try to understand. So 1,47,000, 1,50,000, 1,70,000. 1,70,000 minus 19. 1,70,000 minus 19. So 1,47,000, 1,50,000, 1,70,000, 1,70,000 minus 19. 1,70,000 minus 19. Sainath, very good. Nimma, very good attempt. Pasikanti, very good. Sunam Rani, hello, good evening, ma. So answer is 1,51,000. Sainath, very good. Nimma, very good attempt. So option B is the correct answer. Good evening, ma. So answer is 1,51,000. Very good. Kushala Pashikanti, very good, Amma, very good attempt. Option B is the correct answer. So next, the process of recording financial data up to trial balance is dash. The process of recording financial data up to the trial balance is bookkeeping, classifying, summarizing, analyzing. Financial data up to trial balance is dash. The process of recording financial data up to the trial balance is bookkeeping, classifying, summarizing, analyzing. Journalizing, ledger posting, journalizing, preparation of trial balance. Altogether it is called as bookkeeping. It is a process of bookkeeping. Bookkeeping starts with the preparation of journal entries to the preparation of final accounts. Very good, Kushala Pasikanti, very good answer. Bushra Maivin, very good for the previous question, very good. journal entries to the preparation of final accounts. Very good question. See, Rohit carrying on real estate business sold piece of land for 4 lakhs rupees, sorry, 40 lakhs. 40 lakhs. Cost is Rohit carrying on real estate business sold piece of land for 4 lakhs rupees, sorry, 40 lakhs. 350 lakhs. 400 lakhs. Cost is and 350 lakhs. The profit is 50 lakhs. 350 lakhs. And Rohit is carrying on real estate business, right? Real estate business. So land, piece of land he has sold, so it is automatically revenue transaction. So selling or buying of land pieces, selling or buying the land of land pieces in the real estate business is very revenue in nature, right? It is a revenue transaction. So then the type of receipt, is revenue receipt. And the nature of profit on sale is transferred to profit and loss account. Transferred to profit and loss account. Option B is the right answer. The type of receipt is revenue receipt. And the nature of profit on sale is transferred to profit and loss account. Transferred to profit. Next. Option B is the right answer. Next. In income measurement and recognition of assets and liabilities, which of the following concepts goes together? So you have to be very specific whenever. Yes. So whenever we take assets and liabilities into the consideration, generally you may get some kind of accruals. As you guys are aware that there is a difference between the accrual concept and cash concept. The cash concept mainly speaks about the items either we have received or paid. Where in case of accrual, irrespective of the receipts or payments, whatever the income that we generate or expense we incur during a particular period will be considered as an accrual. Generally, the assets and liabilities, in the liabilities, some amount will be paid and some part will be outstanding, right? In that consideration, in that scenario also, we consider outstanding items as in liabilities. Outstanding expenses will be considered as in liabilities. Outstanding income will be considered as an asset. Then what does it mean? Outstanding reflects the accrual. Outstanding. See, liabilities in the liability or asset. So we do consider outstanding items, outstanding expense, outstanding income, outstanding expense and outstanding income. So what does it mean? Outstanding expenses will be considered in the liability, which shows us accrual concept. It is not the cash concept. It is not the cash concept. It is an accrual concept. Right? Yeah. So liabilities and assets will be recorded for a particular period. Right? So then the periodicity will be considered. Yes. The expenses or incomes. Expenses, incomes have to be matched. So the things happens only with the matching concept. So periodicity, accrual and matching concept. Right? Nice. Have to be matched. So the things happens only with the Kushula Pasikandi try again ma. It is in revenue in nature. You need not to worry. Okay. Nice. Cool. Interpretation means, what is the meaning of interpretation? Revenue in nature, you need not to worry. Okay. Explanation of meaning and significance of data in the financial statements, concerned with the preparation and presentation of classified data, systematic analysis of recorded data, methodical classification of data given in the financial statements. So, guys, interpretation simply, what does it mean? Interpretation. See, interpretation is something like explaining the data whichever we have presented in a particular diagram or any kind of chart. So it is just an explaining its presence and significance. It is a process of explaining the significance and impact on certain variable. So in simple point, interpretation means explanation of the meaning. Interpretation means it is an explanation of meaning and significance in the data in the financial statements. Option A is the right answer. Interpretation means explanation of the meaning. Right. Interpretation means it is an explanation of meaning and significance. A trader purchased goods for rupees 25 lakhs. Of these, 70% of the goods were sold during the year. At the end of the 31st December 2009, the market value of such goods were 5 lakhs, but the trader recorded in his books for rupees 7,50,000. Which of the following is violated? Which of the following is violated? So what does it mean? We try to understand what is the total value. What is the total value? 25 lakhs, right? 25 lakhs. Which of the following is? Of this, 70% of the goods has been. What is the total value? 25 lakhs. Yes. Right? 70%. 70% of goods sold, right? Of this, 70% of the goods has been. Yes. 70% of goods sold, right? 70 lakhs 50,000. What is the 7 lakh 50,000? 7 lakh 50,000. But the trader recorded 70 lakhs 50,000. What is the? At the end of the December, at the market value of such goods were 50 lakhs. 50 lakhs. But the trader recorded his books for 7 lakh 50,000. Which of the following concept is violated? 50 lakhs. So you have to try it. It is concept of conservatism. Concept of conservatism mainly deals with we have to anticipate the losses but not the gains. So the concept of conservatism has been violated. I guess you understood? Yes. Concept of conservatism mainly deals with we have to anticipate the losses but not the gains. So the concept of conservatism has been violated. I guess you understood? Yes. Which of the following is wrong? All the real and personal accounts are transferred to the balance sheet. Nominal accounts are transferred to the P&L account. Which of the following is wrong? Nominal account, yes. All the real and personal accounts are transferred to the balance sheet. Each account is opened separately in the ledger. Yes. Rent is a personal account. Outstanding rent is a nominal account. Rent is not personal account. It is nominal account. Nominal account. Outstanding rent is. It is not nominal account. It is personal account. So what does it mean? Which of the following is wrong? He is asking which of the following is wrong. So option D. Option D is the wrong answer. Okay. Which of the following is? I guess you clearly understood? Yes. Option D is the wrong answer. Okay. I guess you clearly understood? Yes. Next, dash is a root cause for the financial accounting. Dash is a root cause for the financial accounting. So, stepward accounting, social accounting, management accounting, human resource accounting. So, try to understand what is the steward accounting. Steward accounting mainly deals with like management accounting, human resource accounting. So try to understand what is the steward accounting. Steward accounting mainly deals with like steward accounting responsibility that company have to understand. Company have to understand and manage their impacts. And manage their impacts. Company have to understand. Company have to understand manage their impacts. So, steward accounting is a responsibility that the company have to understand and manage their impacts. So, whatever it might be, this is a benefit. Company has to understand the impacts. So, impacts is only the root cause for the financial accounting, right? Very good. Social accounting, management accounting, human resource accounting, of course, but still stewardship accounting is only the root cause for the financial accounting. If nothing is given in the financial statements about the three accounting assumptions, then it has to be treated as social accounting, management accounting, human resource accounting, of course. So try to understand if nothing is given in the financial statements, if nothing has been given in the financial statements, the three accounting assumptions, then it is to be treated as it is assumed that it is not followed. It is not followed. Simple logic. Nothing has been given in the financial statements. The three accounting assumptions, then it is to be treated as the proprietor. It is assumed that the proprietor. It is not followed. Simple logic. The proprietor of the business is treated. And creator the proprietor of the business is treated and creator proprietor business. So now the proprietor has become a creditor since he has become outsider. So proprietor and the business are different, right? So which concept speaks about the proprietor and business are different? It speaks about entity concept, right? Entity concept mainly focuses that the proprietor and the business are different. Very good. Next, fixed assets are held by business for what? Fixed assets are held by business, converting into the cash, it is liquid assets. Fixed assets are held by business for what? Right? Okay. Right. Generating revenue is the correct answer. Generating fixed assets. Fixed assets in a business used to earn the revenue, or to get the revenue, right? Yeah. Which accounting concept? Which accounting concept specifies the practice of crediting closing stock to the trading account? Which account? Which accounting concept specifies the practice of crediting closing stock to the trading account? See, expenses, incomes are to be matched. Then balance is closing stock in trading account, right? So this matched concept comes under matching concept. Yes? Okay. Next. Amount spent to increasing the earning capacity is dash expenditure. Because the earning capacity is capital expenditure. Earning capacity is expenditure. It is non-recurring in nature. Non-recurring in the nature. It is recurring in nature. Okay. Next. Change in the capital account of proprietor. Proprietor's capital account may be due to the loss profit, additional capital, right? It might be due to the loss, due to the profit, or it might be due to capital introduced. So option D is the correct answer. Option D. Next. Consistency with reference to application of accounting procedures means what? Yeah. What does it mean? Consistency with reference to application of accounting procedures means what? Yeah. What does it mean? Consistency with reference to application of accounting procedures means. Consistency with reference to the application of accounting procedures means all companies in the same industry should use identical accounting procedures. Income and expenditure. Income and assets have not been overstated. Accounting methods and procedures shall be followed uniform basis year after year. Any accounting method can be followed as per the convenience. So what does it mean? Income and assets have not been overstated. Accounting methods and procedures shall be followed uniform basis year after year. Any accounting method can be followed as per the convenience. So what does it mean? So answer is year after year. So accounting methods and procedures should be followed uniform basis year after year. So answer is year after year. So accounting methods and procedures should be followed uniform basis year after year. Next question. If one of the cars purchased by the car dealer is used for business purpose instead of resale, then it should be recorded as. Next question. If one of the cars purchased by the car dealer is used for business purpose instead of resale, then it should be recorded as. Yes. If one of the car purchased by a car dealer is used for the business purpose instead of resale, then it should be recorded as. One of the car purchased by a car dealer is used for the business purpose. Since it is not being used for the resale, no resale, right? It's not being used for the resale. Again, it is especially using for the business purpose, right? Business purpose, we have to consider it as a fixed asset, right? Fixed asset. Now try to understand. Whenever we are purchasing a fixed asset, normally fixed asset account debit to purchases account. Purchases account. Here the fixed asset is car, motor car. Motor car account debit to purchases account. Right? So option C is the correct answer. Motor car account debit to purchases account. Right? So option C is the correct answer. If wages are paid for the construction of business premises, dash account is credited and dash account is debited. If wages are paid for the construction of business premises, dash account is credited and dash account is debited. For the construction of business premises, dash account is credited and dash account is debited. If wages are paid for the construction of business premises, dash account is credited and dash account is debited. Yes. Yes. Cash account. So this is a journal entry. Now try to understand. Premises account is debited and cash account is credited. So this is journal entry. So cash and premises. Cash and premises. Right? Next. Human resource will not appear in the balance sheet according to the money measurement concept. As per the money measurement concept, only monetary transactions are recorded. Only monetary transactions are recorded. Okay. Next. Monetary transactions are recorded. Only monetary transactions are recorded. Okay. Next. Is it audible, guys? Bushra, Jalla Triveni, hello. Prithviraj, hello. Kushala, hello. Lomkanil, hello. Hello, guys. Is it audible, everyone? Bushra, Jalla Triveni, hello. Prithviraj, hello. Kushala, hello. Lomkanil, hello. Hello, guys. Is it audible, everyone? Provisions for discount on debtors is calculated on the amount of debtors. Provisions for discount on debtors is calculated on the amount of debtors before deducting the provision for doubtful debts or after deducting the provisions for doubtful debts, before deducting actual debts and provision for doubtful debts, or after adding actual bad and doubtful debts. The amount of debtors before deducting the provision for doubtful debts or after deducting the provisions for doubtful debts, before deducting actual debts and provision for doubtful debts, or after adding actual bad and doubtful debts. See you guys, so normally from the debtors we will be reducing the bad debts or provision for bad debts, and then after we go for the provision for doubtful debts, and then we less provision for discount on debtors. So after considering the provision for doubtful debts, after deducting the provision for doubtful debts, the provision on the discount on debtors is calculated, right? Yes. After deducting the provision for doubtful debts, the provision on the discount on debtors is calculated. Are you all understanding, guys? Yes. Are you all understanding, guys? Next question, try to understand the next question. Which of the following is not a real account? Next question, try to understand the next question. Which of the following is not a real account? Very good, very good. Outstanding rent is, see, cash account is in real account. Purchases is in real account. Investment is in real account. Whereas outstanding rent is personal account. Personal account. So outstanding rent, he is asking clearly which of the following is not the real account. So the outstanding rent is not the real account. Very good answers. Kushala Pasikanti, Spice Store, Nimma. Very good, ma. Very good. He is asking clearly which of the following is not the real account. So the outstanding rent is not the real account. Very good answers. Value of goods withdrawn by the proprietor for his personal use. For his personal use. So should be considered or should be credited to. So journal entry. Value of goods withdrawn by the proprietor for his personal use. For his personal use. So should be considered or should be credited to. So journal entry. Journal entry is like Drawings account debtor to drawings account debtor to journal entry is like purchase account, right? Purchase account. So he's asking, he's very clear, he's asking about the credits, so it is purchase account. Since he is clearly showing that for the personal use he is using, so it is drawings. So he's asking, is very clear, yes, about the credits, so it is purchase account. Since he is clearly showing that for the personal use he is using, so it is drawings. Yes. Next question. Which of the following is incorrect? He is asking us which of the following is incorrect. So goodwill is an intangible asset. Yes. Sundry debtors is an current assets. Correct. Loose tools, tangible fixed assets. Correct. Outstanding expense are not the current assets. It are the current liabilities. So outstanding expenses are considered as current liabilities. So what does it mean? Which is incorrect? Option D is the incorrect. Now option D is the correct answer. So outstanding expenses. Yes. Outstanding expenses are considered as current liabilities. So what does it mean? Which is incorrect? Option D is the Rambabu, very good. Prithviraj, Rambabu, again you have done, but you have done a mistake. Kushala Padikanti, right? You guys are correct. Yes. Very good. Good involvement. Very good. Nima, very good. Bushra, very good. Reshma, very good. Very good responses that you are giving. Kushala Padikanti, right? You guys are correct. Yes. Very good. Good involvement. Very good. Nima, very good. Bushra, very good. Reshma, very good. Very good responses that you are giving. So Mrs. Stationery Mart will debit the purchase of stationery to dash. So Mrs. Stationery Mart will debit the purchase of stationery to dash. Yes. Journal entry. Purchase account debit to cash account. Journal entry or debtors. Okay. So Mrs. Stationery Mart, purchase of stationery, it is a revenue expense. So purchase account debit to cash account. So we have to debit the purchase to purchase account. Option A is the right answer. So Mrs. Stationery Mart, purchase of stationery, it is a revenue expense. So purchase account debit to cash account. So we have to debit the purchase to purchase account. Small items like pencils, pens, files, etc. are to written off within a year according to dash concept. Small items pens, pencils, files, etc. are written off within a year, which is really material or important or significant. Significant. Material, important or significant, it is according to the concept of materiality. So option A is the correct answer. Very good, Dima, very good. Triveni, very good. Important or significant, it is according to the concept of materiality. So option A is the correct answer. Very good, Dima, very good. Triveni, very good. Business enterprise is separate from its owner according to the concepts. Business enterprise is separate from its owner according to the concepts. Business enterprise is separate from its owner. Business enterprise is separate from its owner. Business and owner are separate from the point of business entity concept. Business and owner are separate business entity concept. Right? Business entity concept. Business entity concept. Right? The policy of anticipate no profit and provide for all possible losses arises due to the concept of dash. Again, try to understand the policy of anticipate no profit and provide for all the all the possible losses. No profit and provide for all the possible losses is due to the concept of what? Again, try to understand the policy of anticipate no profit and provide for all the all the possible losses. To the concept of conservatism. Conservatism. Possible losses is due to the concept of what? Very good attempt, Spice Store, very good. Bushra Mavin, sorry ma, it is not consistency, it is conservatism, concept of conservatism. Very good attempt, Spice Store, very good. Bushra Mavin, sorry ma, it is not consistency, it is conservatism, concept of conservatism. Very good, Nima, very good. Very good, Nima, very good. Next, according to the which concept the proprietor pays interest on drawings? Again, try to understand. The proprietor pays interest to the drawings. Next, according to the which concept the proprietor pays interest on drawings? Again, try to understand. The proprietor pays interest on drawings. Proprietor for the personal use, he withdraw amount in the form of drawings. Drawings, he has to pay interest. Now try to understand. The proprietor has to pay the interest to the enterprise since both are different. So proprietor and enterprises are different from the perspective of business entity concept. From the perspective of business entity concept. Both are different. So proprietor and enterprises are different from the perspective. Very good, Reshma. Very good. Good response. Quick response. Very good. Fantastic. Very good, Reshma. Very good. Good response. Quick response. Very good. Fantastic. Cost concept basically recognizes what? Cost concept basically recognizes historical cost. Cost concept basically recognizes what? Historical cost. Basically recognizes, according to cost concept, the transactions historical cost are to be recorded on the value of original cost. Original cost, which is also called as historical cost. Right? Yes. Historical cost. Option B is the correct answer. Okay. Historical cost. Right? Yes. Historical cost. Next. Option B is the correct answer. If the market value of closing inventory is less than its cost price, market value of value is less than cost price. So market value is less than cost price. The inventory will be shown as market value. So market, as per the relation concept, market the cost of an asset or the inventory will be traded. So relation, as per the relation concept, the cost of an asset or the inventory will be concept. Inventory will be valued at market value or cost, whichever is lower. Whichever is lower. So now try to understand the here the market price, market value is lower, cost price is higher. So now market value will be considered. So now try to understand the here the market price, market value is lower, cost price is higher. So now market value will be considered. The market price of the goods declined than the cost price. Then the concept that plays a key role is the market price of the goods declined than the cost price. Then the concept that plays a key role is relation concept. Relation concept declined than the cost price is the right answer. Fixed assets. Now try to understand very important relation concept. Is the right answer. Fixed assets. Now try to understand very important Now try to understand the concept here. He is being clearly showing that fixed assets are double the current assets and of the capital. Now current assets are 3 lakhs and investments are 4 lakhs. Then the current liabilities recorded in the balance sheet are how much? How much? Now current assets are 3 lakhs and investments assets are 4 lakhs. And the current liabilities recorded in the balance sheet are how much? Try to understand the question. Fixed assets are current double the current assets and of the capital. The current assets are 3 lakhs. Current assets is equals to 2 lakhs. Fixed assets are current. Okay. Double the current assets. Fixed assets are double the current assets. Fixed assets are double the current assets. Is equals to 2 into 2 lakhs. Is equals to 4 lakhs. Fixed assets are double the current assets. 2 lakhs, 4 lakhs. Current assets. Is equals to 2 into of the capital. Is equals to 4 lakhs. 2 lakhs, 4 lakhs. Of the capital. Fixed assets are of the capital. What does it mean? 4 lakhs fixed assets are of the capital. Are of the capital. What does it mean? Capital is equals to, what does it mean? Yes, if it goes here, multiplications. So 2 into 4 lakhs, 8 lakhs. Capital 8 lakhs. Now try to understand. Balance sheet. Goes here, multiplications. So 2 into 4 lakhs, 8 lakhs. Liabilities, 8 lakhs. Assets. Now try to understand. In the question has been given capital, current liabilities, fixed assets, current assets, investments. Okay. In the fixed assets, he has given the value 4 lakhs. Current assets 2 lakhs. Investments are 4 lakhs. Sorry. I am really sorry. The current assets are 3 lakhs. Current assets are 3 lakhs. Current assets are 3 lakhs. So fixed assets are 6 lakhs. 6 lakhs. Okay, 6 lakhs. 6 lakhs is equals to half of the capital. Capital is 12 lakhs. Capital is 12 lakhs. Okay. Now try to understand. Capital is 12 lakhs. Okay. For your convenience, again I am doing the problem. Sorry for making the things. Yeah. So now try to understand. Capital is 12 lakhs. Okay. For your convenience, again I am doing the problem. Sorry for making the things. Fixed assets are double the assets. So now try to understand. Current assets 3 lakhs. Okay. Current assets are 3 lakhs. Fixed assets are double the current assets. 3 lakhs. Fixed assets double 3 lakhs the current assets is equals to 2 into 3 lakhs is equals to 6 lakhs. Okay. Now fixed assets are double the current assets and of the capital. Fixed assets is equals to half of the capital. That implies, what is the value of fixed assets? 6 lakhs. 6 lakhs is equals to half of capital. Capital is equals to, it goes here, it becomes 12 lakhs. Right? 12 lakhs. Now come into the picture. Now try to understand. Here, balance sheet. In the balance sheet, you have liabilities, assets. In the liabilities, you have capital, current liabilities. Here you have fixed assets, current assets, investments. So total of assets and total of liabilities are same. So in the now here in the fixed assets we have 6 lakhs. 6 lakhs. Current assets we have 3 lakhs. Investments we have 4 lakhs. Okay. So in the capital we have 12 lakhs. So what is the difference? What is the total? 6 lakhs plus 3 plus 4. It is 13 lakhs. It is 13 lakhs. In 13 lakhs, capital is 12 lakhs. So the difference is 1 lakh. 1 lakh, right? Yeah. So answer is 1 lakh rupee. So current liabilities, the value of current liabilities is 1 lakh. In 13 lakhs, capital is 12 lakhs. So the difference is 1 lakh. 1 lakh, right? Yeah. So answer is 1 lakh rupee. So current liabilities, the value of current liabilities is 1 lakh. Which of the following framework and accounting policies so that the financial statements of different enterprises become comparable? Which of the following framework and accounting policies so that the financial statements of different enterprises become comparable? Which of the following provide framework and accounting policies so that the financial statements of different enterprises become comparable? Only the accounting standards will help us to frame like different enterprises to become comparable. Accounting standards are the uniform policies different enterprises to become comparable. Accounting standards are the uniform policies. Yes. Uniform policies. Yes. Next. Which of the following factors is not considered while selecting accounting policies? Next. Which of the following factors is not considered while selecting accounting policies? Which of the following factors is not considered? So, is not considered while selecting accounting policies, that is substance over form. Substance over form. Is not considered. So, is not considered while selecting accounting policies, that is substance. Very good attempt, Reshma, very good. Nima, very good attachments. Substance over. Very things. Very good attempt, Reshma, very good. Nima, very good attachments. Very things. Debit the receiver, credit the giver is dash account. Debit the receiver, credit the giver. This is a golden rule. Debit the receiver, credit the giver is dash account. It is a golden rule of personal account. Yes? Debit the receiver, credit credit the giver. This is a golden rule. It's a golden rule of personal account. Very good, Triveni. Very good for your response. Very good. So debit the receiver, credit the giver is an golden rule for personal account. Very good, Kushala. Very good. Very good, Triveni. Very good. Cash account is a dash. Is it a real account, nominal account, personal account? None. So as you guys know, cash account, it's purely a real account, which we will be debiting when it comes in. Credit what goes out. Whenever we are, whenever we feel that cash is going out, we'll be creating, and whenever we feel that cash is coming in, then we will consider it as a real account when it comes out in. Which we will be debiting when it comes in. Credit what goes out. Whenever we are. As per the accrual concept, which of the following is not true? He is asking us, which of the following is not true? Revenue minus expenditure is an. He is asking us not true. Revenue minus expenditure is a profit. Yes, true. Revenue minus profit is expenditure. True. Revenue is equals to profit for expenditure. Profit plus expenditure. True. Whereas sales plus gross profit is equals to revenue. It is not true. So revenue is nothing but revenue is the amount that we get out of profit and expenditure. Right? So accrual concept, as per the accrual concept, so sales plus gross profit is revenue is not correct. So Mr. X sold goods to Mr. Y. Ask Mr. X to keep the goods with him for some time. So is it a part of what kind of delivery? Ask Mr. X to keep the goods with him for some time. It is a symbolic delivery. So X has sold the goods already to the Y, but X is asking to keep the goods with him for some time. It is in symbolic. It is a symbolic delivery. So X has sold the goods already to next the Y, but X is asking to keep the goods with him for some time. It is in symbolic. If already it is reported, if nothing is written about the accounting assumptions to be followed, it is presumed that they have not been followed. They have not been followed. Okay? Yes. Next, capital account is a dash account. Capital account is a dash account. Yes, it's purely a personal account. Very good, ma. Very good response. Very good, very good. It is not a real account, but it is not a nominal account. Yes, it's purely a personal account. Very good, ma. Very good response. Very good, very good. It is not a real account, but it is not a nominal account. So Jalla Triveni, sorry ma, it is not the nominal account. The capital account is purely personal account. Yes, Gangaraju Mata, very good. Welcome to the live. You have given the correct answer, Gangaraju Mata. Very good, fantastic. So Jalla Triveni, sorry. So guys, you are expecting more replies for this question. Capital account. Very good, Spilester, very good answer. Reshma Sri Konga, sorry, it is not a nominal account, it is a pure personal account, ma'am. Yeah, moving to the next question. Cash account. Very good, Spilester, very good answer. Reshma Sri Konga, sorry, it is not a nominal account, it is a pure personal account, ma'am. Yeah, moving to the next. Cash account is in personal account, real account, nominal account, none. It is not a personal account. It is not the nominal account. It is real account. So option B is the correct answer. Cash account is in personal account, real account, nominal account, none. Oh, very good answer from Nima. Very good. You have given a. Sorry, ma, Nima, you have given a wrong answer. Yes, Triveni, you have given the correct answer for cash account. Cash account is a real account, ma. It's not a personal account. Sorry. Triveni, very good, ma. Very good for your answer. Moving forward to the next question. The principal debit the receiver and credit the giver is related to dash. Debit the receiver and credit the giver is related to dash. A personal account, real account, nominal account, or none. Credit the giver is related to dash. Debit the receiver and credit the giver is related to dash. We are expecting more answers from these guys. A personal account, real account, nominal account, or none. We are expecting more answers from these guys. Jalla Triveni, very good. You have given a correct answer. Debit the receiver and credit the giver is relating to the personal account. Nima, sorry ma, you are wrong. Triveni, very good ma, very good. Already you have given an answer for the first time. Your answer is correct for the first time, no worries. Expecting more replies for this. Relating to the personal account. Nima, sorry ma, you are wrong. Triveni, very good ma, very good. Already you have given an answer for the first time. Your answer is correct for the first time, no worries. Expecting more replies. Our live is about to end within minutes. Within a few minutes, our live is going to end. Guys, please respond. The debit the receiver and credit the giver is related to the personal account. Next. As per the matching concept, revenue minus dash is the profit. Guys, please respond. The debit the receiver and credit the giver is related to the personal. As per the matching concept, the revenue minus expenses is a profit. Revenue minus expenses is a profit. Okay, cool. As per the matching concepts, the revenue minus expenses is a profit. Revenue minus expenses is a profit. Very good, Nima, very good. Thank you for your answer. Triveni, sorry ma, sorry Triveni, your answer went wrong, but still okay, that you have deleted, very good. The concept is like, as per the matching concept, the current year revenue, whatever the revenue belongs to the particular year should be dealt with the expenses of a particular year. Reshma, sorry ma, it is a wrong answer. The correct answer is expenses. So whatever the difference between the revenue and expenses is called as a profit. Very good, Gangaraju Mata, very good. Good response. Just moving forward. Sales minus gross profit. Sales minus gross profit. See, as you guys are not cost of goods sold plus profit. Cost of goods sold plus profit is equals to total value of sales. So, cost of goods sold plus profit all combinedly comes with sales. Now try to understand. Yeah. Sales minus gross profit is equals to cost of goods sold. Cost of goods sold. Reshma Sri, very good. Jalla Triveni, very good. You guys are giving in beautiful answers. For your consistency, hats off for your consistency. You are doing very well job. We are about to close the session, so you just respond as soon as possible. Which of the following is a real account? So building account, capital account, sham account, rent account. Try to understand. So capital account again it is in personal account. Personal account. Sham account it is in personal account. Rent account it is nominal account. And building account which is real account, right? So option A is the correct answer. Valuation of stock in accounting follows the principle of cost or dash whichever is lower. So stock will be valued either so cost price or market value whichever is less. So market price. Option A is the correct answer. Oh, very good, Nima. Very good. Your answer has been in the correct zone. So Gangaraj Mata, sorry, your answer went wrong there. Cool. Which of the following is not the nominal account? Try to understand the nominal account. See, salaries, expense, interest, income, commission received, it is income, expense. So again, outstanding salaries, outstanding salaries are personal account. Personal account. So what does it mean? Expenses, all the expenses and all expenses and incomes are nominal account. So outstanding salaries account. Jilla Triveni, very good ma. Mr. X is a dealer in electronic goods such as refrigerator, washing machine, air conditioners, televisions, etc. He purchased 2 air conditioners and installed in his showroom. In the books of X, the cost 2 air conditioners will be debited to. So try to understand. He is installed in the showroom, right? He is not for resale, right? Yeah. So journal entry will be like is like fixed asset account debit to cash account, right? So option C is the correct answer. C is the correct answer. Right? So option C is the correct answer. C is the correct answer. A trader calculated his profit as rupees 1,50,000 on 31st March 2014. It is a transaction or event, or transaction as well as event, or neither transaction nor event. A trader calculated his profit as rupees 1,50,000. He is calculated his profit. He calculated on the particular day. So it is a pure event. Okay, so option B is the right answer. Option B. Next. For every debit, there will be equal credit. According to what? For every debit, there will be equal credit. So that is as per dual aspect concept. For every debit, there will be equal credit. So that is as per. Very good, Jilla Triveni. Very good. your answer has been correct. Triveni, perfect. You have given a correct answer. Historical cost concept requires a valuation of asset at original cost, replacement cost. So try to understand, historical cost concept requires a valuation of asset at original cost, replacement value, net realizable value, market value. Historical cost concept requires a valuation of asset at original cost, replacement cost. So try to understand, original cost concept requires a valuation of asset at original cost, replacement value, net realizable value. So option A is the correct answer. Nima, your answers are too slow, ma. Make it fast. We are already in the 54th question. The comparison of financial statement of one year with that of another is possible only when concept is followed. Which concept is followed? See, for example, financial statements of 2015 and financial statements of 2020 can be compared only if they are following the same policies. Same policies are followed. So same policies to be followed as per the principle of consistency. As per the principles of consistency. Right? So option C is the correct answer. Same policies are followed. So same policies to be followed as per the principle of consistency. So try to understand the profit and loss. Profit and loss is to be calculated at the stage of what? So option C is the correct answer. See, whenever we prepare the profit and loss is to be calculated. Journalizing, ledger posting, trial balance. See, whenever we prepare journalizing and final accounts. These final accounts will be prepared only during the time of summarizing. This classifying will be done only when trial balance. Posting will be done in the ledger balance. Recording will be done in the journalizing. So summarizing. So during the summarizing only the final accounts will be prepared. So with the help of preparation of final accounts, we will be able to calculate the profit or loss. Will be done in the ledger balance. Recording will be done in the journalizing. So summarizing. So during the summarizing only the final accounts will be prepared. So with the help of preparation of final accounts. So which of the following is not the main objective of accounting? Systematic record of transactions, ascertainment of profit or loss, ascertainment of financial positions, solving tax disputes with the tax authorities. Systematic record of transactions, ascertainment of profit or loss, ascertainment of financial positions, solving tax disputes with the tax authorities. He has been given like it is an which is not the main objective of accounting. Which is not the main objective. So it is in systematic record of transactions, ascertainment of financial positions, solving the tax disputes. Solving the tax disputes. So it is not the transaction. Okay. Very good. Next. So it is not the transaction. Okay. Very good. Next. Very good response by the Spice Store, Jilla Trivedi, Gangaraju Matta, Thadakapalli Nimma. Very good responses. An asset was purchased for rupees 10 lakhs with the down payment of 2 lakhs and bills accepted for 8 lakhs. What would be the effect on the total assets and total liabilities in the balance sheet? An asset was purchased for rupees 10 lakhs with the down payment of 2 lakhs and bills accepted for 8 lakhs. What would be the effect on the total assets and total liabilities in the balance sheet? asset purchased for 10 lakhs, cash we have paid of 2 lakhs. Welcome Dhanavat Sandhya to the live stream. Welcome ma. So asset purchased of 10 lakhs, cash paid versus of down payment of rupees 2 lakhs. Now try to understand. Remaining amount, whatever the amount is, like bills accepted. Bills accepted. Bills accepted. Try to understand. Bills accepted means bills payable. Bills payable comes under liability of rupees 8 lakhs. Now try to understand. Balance sheet, the liabilities, assets. Liabilities, assets. So now the bills payable has been increased to 8 lakhs. 8 lakhs. Assets. Coming to the assets, now asset has been increased for 10 lakhs. 10 lakhs and cash has been decreased. Cash value has been decreased for 2 lakhs. What is the net? So what is the net effect? Net effect. Asset increased by sorry. Asset increased by 8 lakhs and liabilities increased by 8 lakhs. 8 lakhs. 8 lakhs. Asset increased by 8 lakhs. Asset increased 8 lakhs. Liability increased 8 lakhs. Asset increased 8 lakhs. Very good, Dhanavat Sandhya. Very good. Very good for your explanation. Spice Store, you are giving in quick answers. Very good. Keep it up, ma. You can score a good rank in MCOM entrance as well. Other competitive examinations with respect to the commerce. Next. The rule debit all expenses and losses and the credit all incomes and gains relates to what? You can score a good rank in MCOM entrance as well. Other competitive examinations with respect to the commerce. Next. The rule debit all expenses and losses and the credit all incomes and gains relates to what? Debit all the expenses and losses and credit all incomes and gains related to what? Option A, personal account. Option B, real account. Option C, nominal account. And option D, all. Incomes and gains related to what? Option A, personal account. Option B, real account. Option C. So guys, you have given a fantastic answer. Jalla Trivedi, Dhanavat Sandhya. So Nima, yes. Gangaraju Mata, Kushala Pasikanti, Spice Store. You guys have been given a correct answer. The answer is nominal account. Nominal account, debit all expenses and losses, credit all income and gains. So option C is the correct answer. And last question, guys. Credit all income and matching concept means what? So option C is the correct answer. What is the meaning of matching concept? Last question, guys. Assets is equals to capital plus liabilities. Transactions recorded as the accrual concepts. Anticipate no profit but recognize all the losses. Expenses should be matched with the revenue of the period. Transactions recorded as the accrual concepts. Anticipate Hey, hello Rachna. Sorry, ma. I thought it could be like, you are the spice store. I thought your name is a spice store. Hello Rachna. Hello, hello. Yeah. So, Rachna has given a answer like, expenses should be matched with the revenue of the period. So, we are expecting more answers. The Gangaraju Matta has given assets is equals to current capital plus liabilities. Kushala Pashikanti has given assets is equals to capital plus liabilities. So we are expecting more questions, more answers, guys. Capital plus liabilities. Kushala Pashikanti has given assets is equals to capital plus liabilities. So we are expecting more questions, more answers, guys. So matching concept means expenses should be matched revenue. So matching concept means expenses should be matched revenue.